TFNN, educating investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman here on this Tuesday, the 16th of September, and we're looking at, let me just run this real quickly. I'll first run the numbers, then I'm going to show you exactly what I'm looking at here. The Dow is down 181 and 45,702. There is a rectangle formation that I drew in some time ago, went just above it, and now we're back into it, and I'll talk about that in a moment, but I'm calling this, just for the moment, D/C. Very unusual that I would actually put a D and then a C. It would be an F and a C or an F and a B, but this is unusual. I don't want to spend time on it until I'm finished with the actual report itself. So here's the update. We've got the S&P hits an all-time high today, and now it's down 7.3 at 66.08. It hit 66.26.99. Let's call it 66.27 because I had 66.22 as the Fibonacci expansion. One of the things that I like to do, but look at this weekly chart, not a single sign of turning down in terms of, look, the 9 is way over the 14 and the price is way over the 9. The rising 200 period exponential moving average, positive. MACD, positive. Relative strength at a high, positive. Stochastic flat at 94%, positive. Blue on a balanced volume, a little bit overbought, and that's it. I mean, that's the weekly chart. The daily chart has almost the same aspect. The only difference is that if you look at the distance between the 9 and the 14 period moving average, and the 9's over it's expanding, but look at the price. That's a little bit overextended, but the MACD is still expanding. The stochastics at 94% of the daily on balance volume just made a W, an M-shaped pattern. If it was, I'll talk about that in the meantime. Let's just say if at any point between tomorrow, or it could be today, let's say from today through to, I'd like to go into the full Monday. Monday's close. The S&P is below 65. Let me just go to the 100. Let's go to the 120-minute chart. Yeah. So 65 and this 40-period moving is 65.86 is under 65.80. No, it needs to be more than that. 65.66. Under 65.66 by Monday or Tuesday this coming week, that portends pretty much a week period going into the very last part of September, very early part of October, at least. All right, let's go to the QQQ. I'll do this much quicker. QQQ is trading down. Oops, now it's up 3 cents at 591.6. Now it's down. 591.63, down 5 cents. Leg D, we've got all-time high of 592.86. Very good action. Same thing. I don't want to repeat everything other than to say it's going to take, well, let me just sum it up real quickly. It's going to take a move of the Dow up, down, down over about 500 or more points in very short order to be able to even make a little dent in the 914. It'll have to be about 1,000 points down by next week. What are we doing today? A week from today. Over 1,000 points down, we've got ourselves a consolidation. We due it. We've got to be ready for it. We're going to be planning for that some way or another. But right now, we can't complain. We've had some fabulous positions in our portfolio. And to tell you the truth, on the one hand, I'd love to stay up here. It's just kind of fun. On the other hand, be realistic. I would love to see an opportunity to add to some of our really good positions, bought much lower down, because I think that these are the areas that are still going to be viable. All right, let's go to the IWM. It was fading for a couple of days. Where did I type that? IWM, right here. There we go. IWM is trading right now down 2.37 at 236.97. Yeah, it's starting to fade a little bit. 240.93 is a peak G, but if it goes to 240.94, I have to consider that a C, and then you're going even higher. So this says to me, well, everything I'm looking at right now says there's an opportunity for the market to take this as a really good excuse for a breather. The other thing is, very seldom has the Fed, as I recall in my memory, has the Fed made the exact ictus change in the market. So we've made all-time highs today in the S&P and the QQQ, SMHs as well. Let me just see, SMH. Yep, SMH, semiconductors, leg D. Is it even possible that the Fed becomes the ictus, the turning point for a big move down? I mean, a pretty big move down, not just a 800-point pullback and then we start running again. I mean, something that lasts about a week or two. I think this is an opportunity for it. Doesn't mean to say it's going to happen. All right, now we're going to get to the nitty-gritties. Semiconductors trading up 64 cents at 307.81. Still strength in that area, and that's really important. I do want to go to the gold. Gold right now is trading up 16 at 37.35. Now, if you look at this particular chart, that doesn't look like a vertical move to the upside, a kind of an exponential spiral to the upside. This is just a very steady move. Look, only green candles, one little red candle, two little candles, and now it's in leg D at 37.36.1, all-time high. Leg D daily, leg D weekly, leg E monthly. Let me just show you something even more important. Look at this. This is the GDX. This is the gold miners. And I always say that I like to see gold miners leading because I'd rather that. This is just my own impression of markets. I prefer to see the miners say, hey, we're active, we're making money, we're doing very well, rather than gold to spiral up because of geopolitical concerns. And that's really important. So the GDX right now, whoops, I typed it in twice. There we go. GDX is up at an all-time high yesterday to a leg D. And it's got a slightly lower high today, 70.64. Yesterday's high was 70.76. So just a fractional lower high at this time. The GSASC in the weekly after an instant restart breakout. These breakouts are very important. And a leg F in the monthly chart. And 66.98 was our target. We're at 69.99 right now, having hit 70. So that's really important. Now, here's something very, very interesting. Look at the silver. Hey, silver, look at that. Up 34 at 43.34. I had a measured move to the upside, which said by June of this year, we should tag the previous high, not major high, but a high of consequence, which was right here at 43.28 back in September of 2012. This is the monthly chart, September 2012. And we've taken that out. The next one, there's a whole series of highs that go all the way higher. And this is the continuous contract all the way to a high that was made back in April of 2011 at 58.33. I'll be back in a moment. Basil Chapman, Dow's down 177.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, so let's just see. So we've got the 10-minute chart went to a leg D to the downside, and there's a big arch formation in the E-mini. I haven't changed yet to the next month. I usually wait. I might do it today, who knows. Anyway, yeah, so that was very important. And when you think about it, we're down $5.75 in the E-mini. You know, buying just keeps coming in. It's quite incredible. All right, let me just go to a couple of things here. Had some questions, but I need to finish this. So silver, actually, I'll take a moment. Let me just go to this. This is core mining, which we have. A reason is it's got gold, silver. It just does everything you want. I just wanted to show you so that it had 16.41 as a target from July was it January? So this is, it was July of 2016, and it made this cup formation like a W, soft W, and another cup formation, and then it broke out to a recovery high. But wait a minute, look at this. This is a monthly chart. Look, yeah, this is a monthly chart. Have a look at this. This is really what you want to be looking at. Once upon a time, not even once upon a time, just back in 2011, this is a stock that was trading at about 37. And it comes down to $1.62 in 5 years, boom, down to, then it rallies and it can't break above that 16 level. It goes to 12.60 to peak D and in January or February or so of 2021, and February I think it was, at 12.60 it pulls back, it goes to $2.02, and now it's broken out above all of that, and it's got this left side mountain on the left that it needs to try to climb. So that, to me, is a much better picture. Let me squeeze it one more time. Now look at this. This is a stock that once went to the 70s. I can even go back further, but 2006 in the 70s. And here it is at $16, having gone down to $1.62. Something's going on, and that's very important. And if you look at it as objectively as possible, what you say is that it went to a lower low at 202, back in October of 2023, but now it's gone to a higher high. Think of that as one candle, whatever it is, a yearly or 2 yearly candle, as this is an overwhelming move. This is really, it's a bigger candle than anything on the left. And that just says, if that is one move to the upside, let's even call it two because it stalled for about 5 months. This is a very good sign looking out. Now, shorter term, there's something else going on. So I don't know what to define it as shorter term, but if you look at what's going on in the metals, at first, I was talking about this as a geopolitical thing. We got in because it looked like a geopolitical thing. But I think there's something else going on here as well. So having broken out to this level, now let's just go back to the GDX, because if core mining is in gold and silver, then GDX is perfect because that is in the gold miners. It has silver as well. But if you want to really be objective, let's go to the XAU. Is that the one that I have still? No, HUI. HUI. There you go. So HUI. And I got a .x, I got a guess. HUI.x. There it is. Hey, what happens? I'll never get this right. I used to have them all, but then TradeStation changed it. So what did I say, HUI or XAU? Let's go back. I'm sure it's the XAU that I have. XAU, but it's not. All right, I'm not going to waste time. Oh, there it is. Oh, XAU. Now look at this. This isn't a leg F. It's just gone straight up. This is a Philadelphia gold and silver sector. Look, it very much looks like the CDE, right? Core mining. And so that to me is really important, that this, on a visual basis, is a very steady move. It is a parabolic move, usually has, towards the end of the move, it starts to have candles that are 2 or 3 times bigger than the normal candles, and they get bigger, and then it comes back, and in 2 moves, it just takes out all those candles on the left. We haven't done anything yet like that, but in the meantime, I'm just trying to point out, I'm going through sector by sector to say, hey, this is really important what's happening now. I do want to just briefly go to high-grade copper. High-grade copper's got this crazy move because of this candle right here, this horrible candle. I think this is the equivalent of when crude oil went minus 40. You remember? It was negative. But let me just do this right here. There you are. Now you can see the candle properly. This is a leg E. This is much better action. So I'm looking at this, I'm saying there's something going on, because now you've got the copper sector moving, you've got the gold and silver, you've got uranium. Look at this URA, uranium. Look at that, down today, but whoa, look at that nice move up. So something's going on that's a little different. Now, I want you to show you something. Have I finished? No, I haven't. TBT, this is the bonds, yield. This is the ultra-short limit 20-year Treasury bond yield, ETF. And look at this, down at 33.40, having arched over, but not really breaking down in the sense that, oh, rates are really going down. We don't know. That maybe tomorrow afternoon going into Thursday, you got the 200-period moving average of 32.01 hit, or you've got the TLT at a peak E double top right now at 90.16 unchanged, suddenly going to the 91s. If you look at the monthly chart, the lowercase h goes to a lowercase m, successful. It didn't take out the left side low, but you need to see 90.17. You really need to see in October the TLT, iShares 20-year Treasury bond ETF, trading in the 95.80 to 96.90 area. And we're at 90. If you're really going to see a persistent low yields, and I'm not sure I see that right now. I don't think I see that in the market. Now, have I done anything that I can go to the next thing that I want to do? Just real quickly, the crude oil is going up. I mentioned crude oil before. Yeah, all within this lower range. But look, higher highs and higher lows all of a sudden. So I'm watching this because on Friday, if you suddenly see the crude, and there's options expiration, where would you buy CD on any pullback? What level? Okay, I'll get to that question, and I will look at QBTS and RGTI. Those are important. I will look at those. Yeah, and the other question is, all right, I want to do this because I need to cover it. I prefer for my subscribers not to be surprised. I try to keep them going for the last 40 years or whatever. I like to keep people going through the Straits of Gibraltar without hitting the rocks. We do our best. Not even in 1987 on October the 19th did we got most of the money out, had a little bit left, just because they were so nicely up. They went up the very next day, but we got a huge amount of cash out. And I try my best. I mean, I might look silly sometimes because I'm talking about something that hasn't even happened, but I like at least to be prepared. So let me show you this. This is the Dow. And I don't want to go through the whole thing. It's not Technical Friday, but I'll go through it just vaguely. There's a Chapman wave methodology that I spoke about. I wonder if I can find my CD, which I just haven't had for a little while. We run out of them, and I haven't made any new because nobody has CDs anymore. So what I'm going to do is I'm going to go to. I want to talk about the restart, meaning you make a low and then you're running, but you keep testing that low without breaking it, and then you break out. If it happens at a much higher level after an instant restart, I call it a Chapman wave unconventional flat-based restart.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
I'll go through back. I'm just trying to find something here that's not there. It's not there. Okay. Yeah. Okay, good. So let me just do this. I had a question. I'll follow up just in a moment. I'll come back to the Chapman wave in terms of the unconventional fat-based restart. So here we go. So the question is, Basil, where would you... Oh, where did it go to? Where would you buy CDE, that's core mining, on any pullback? What level? 15, 14, 9-period exponential moving average. So have a look at this. So if you're looking at the steady move up, the MACD is still good. The relative, look at that red. That's the relative strength index. To me, whenever it goes red like that, I always find that it's very close. It's like the on-balance volume. When it finally goes to very overbought, that's the one indicator that says to you, be careful. So the RSI, the first time it went there, that was a big positive. When it does it a second time, it says to me, okay, this is now, just on a purely Chapman wave methodology, this is now looking a little bit overbought. Doesn't mean just, oh my God, sell everything. It's going. It just says, this is meaning, this term overbought means that it should become maybe not necessarily underbought, but reasonably bought. Okay, so where would I look? I don't know what it's going to take because of that huge move yesterday. That was such a pleasant surprise. But what I'm going to suggest, I think I'm going to tell my subscribers, take another little bit off for over 100% gain. I'm getting a little bit, just in terms of money management, I'm saying to myself, take a little bit off. It's just the most important thing. Now, that's different to somebody coming in on this particular stock fresh. Between 15 and 14 is one thing. But if this goes in speed down to the 14.50 area, let's just say even by this coming Tuesday, then I'm going to say you have to hold it for a little longer. So my first thing is, if you aren't in it, if you want to just start just a little nibble, 1450. It's at 1685 right now, having hit 17.15 record. Not an all. It's a multi-year record, not an all-time. I'm just going to say that's what I'd be waiting for. Let's do a little bit more to see. I don't want to project something that hasn't happened. So I'm just saying that you asked me an ideal place would be between 15 and 14. That's where I'd look at it. But I don't want it to happen in one fell move because it means it's probably going to go down a little deeper than that. All right, next question is, while we're talking about that, SIL, that's silver. Look at that spiral to the upside. Global X Silver Miners ETF. Wow, I haven't even updated. This is leg F. Could be just a plain old B. And this is an E. Still a D. Unbelievable. That is a huge move. Now, this looks a little getting a little exponential, but it isn't yet, theoretically, in my book. But the daily chart, this is a silver. Is that? I think that's a peak. 56 round number. 56 round number. Yeah, look at that. That's a peak right there. And that's an E. We're in an E right now. It could even be another instant restart. So SIL is the Global X Silver Miners ETF, down 91 cents to 66.47, having made a high. I don't think that's an all-time high. Probably it is. No, it's not. Not an all-time high, but making a high. Oh, it looks very much, it looks like the coal mining as well. Okay, I'm just going to say, it's in the same category. If it's speed that pulls it back down to the 63 area, 62, 63, I don't want that. If it just starts to steadily move down, that's one thing. I can't, I really can't say to get in right now. You are in it, and the question is, where would you add? I'd say wait a little bit to add because look, all the technicals are very strong. This is the case where if it's one sudden move to the downside, maybe 2 days, and then it starts to rally again, you got to grab it because that's going to be the V-shaped pattern. But if it's a sudden move and it stays down, in other words, it goes from 66 right now, and on Friday or Monday, this coming Monday, it's down to 62 to 61, I'd say now you've got to hold off to go in. All right, I hope that helps you. So, yep, that's that. Next question. Okay, here we go. I'm not going to get disturbed. I have to finish this right now. So, in my methodology, I took years to find out how a rebuy is different to a restart. So, when you get I have them written down, but I just don't have it right now. But let's just say you were starting off, and there was this real bumpy ride at the bottom. Very few. Let's go. Yeah, even here. This is a restart. Peak A, peak B, pulls back sharply, starts another A. That's your restart. Remember, that's where we got into the Dow, into the 3 times long. The latest iteration of the 3 times long buy that we've had was off this H pattern. So that was a restart. And when this breaks to the upside, it breaks up quite decisively very often, or it goes into the rectangle formation. When it breaks out decisively, instead of just popping above the rectangle and then going right to the bottom of it, that's negative. All right. With that said, look what happens here. In this particular instance, I've spent, I don't know how much time I've spent counting this. It could be automated. It's not. Look, here's your low at 43,340 back around August the 1st or so. So it goes peak A, peak B, pulls back, C, D. And then it has Chapman Wave instant restart within 3 bars because it goes to a higher high. So then it goes E, back of your mind you say A. But wait a minute, it went below that trough of E. So technically it should negate that completely. And now you've got a brand new start. That's an A, that's an A, that's a B, and that is a C. All right. Chapman Wavers know exactly what I'm talking about. If not, just listen to me. Bear with me for the moment. What I'm suggesting is that when you have this, it took me years and a lot of money to find out this particular technique, that if it goes to an instant restart, circle it, put it in there, because if after that it starts to rally, and every time it really fails to continue up because it has a sharp move down, coming back to your peak D, it says, you know what, think Simpson and Bart Simpson hairstyle, the spiky hairstyle that says no matter how high you go, there's a really good chance that when you make that big turn down, you're going all the way to the low that was established. And this is the low that was at 44,579 or something. Yeah, 45,579. That would be the target over a period of time. Now, what I've done is I've drawn in, if this is the case, you remember I did the same thing with the FXI and it didn't work. I said, uh-oh, wrong. I drew it in over here. Did I still have it? Yes, I had it in over here, and I said that we should still be coming down. And then it did come down after that peak F, and then we started a brand new buy signal. So I'm looking at this and I'm saying, when it works, it's fabulous. I've got a bunch that have worked, and I've mentioned them here on the show. But let me show you something that's really important. If instead of coming down, we break up above 46,137.28 or whatever it is, starts a brand new leg D. So I have to be prepared for both circumstances, and I'll be back in a moment. 1,162.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. an amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
All right, so just to make it as clear as possible, tomorrow at, say, between 3 and 4 o'clock, if the Dow is down quite sharply, I don't mean just 200 points, I mean over 400 points going into Thursday morning, that is exactly what I want to be prepared for in this particular, it was a warning in this particular Chapman formation that I've studied for years and years and years. At the same time, I have no signal per se to say that that's going to happen. We could, in fact, bounce and make that leg D. I've got to be prepared for both circumstances. But because we've gone up so much, something like the SPXS 3 times short or something, whatever it is on the short side, these have dropped so much that even if there is a big move, if we are going to get a sustained move of about a week, let's say, to the downside, you'll have time. So I don't want to get carried away. I don't want to lose money for nothing. At the same time, I do want to take opportunity where it's there. So that's what I'm going to be trying to prepare for tomorrow for subscribers. And some of our positions are even now, as the market's pulling back, holding really well or even up. So I don't want to get in the way of this. That's the whole thing. You don't want to spoil a good opportunity both ways. So 18.31 unchanged is QBTS. This is D-Wave Quantum. I've loved this stock for a long time, but seldom had a chance to get in because it moves either so quickly or I'm looking at something else. So it's been opportunistic. I have not taken it. But right now it's in leg C. And it's holding very well in the market that's pulling back. Look, the Dow's down 170, S&P is not down much, down 9, but it is down. So this is down just a fraction. I like it, but here's the pattern that is hard. You go look at all your charts and come up with this pattern. It doesn't happen really. It's the cup formation that goes to a higher high and then another cup. Because look what we had. I don't want to belabor this, but let me show you something. Look, here's the CDE. No, it's not the one I wanted. It is pattern right here. So there's the same pattern. Look, there's the cup going. It's the inverted M-shaped pattern. This is the soft W formation, right? And when but this didn't make a higher high in the middle. That's why this is so unusual. In fact, if you want to be as brutal as possible and just go straight to the core of what might be the issue, QBTS could in fact be making a head and shoulders pattern, right? Head, shoulder, head, shoulder. It hasn't stalled yet, but that's what's a possibility. I like the pattern in the meantime, because look, the MACD daily is really expanding. The histogram, the vertical line is expanding. Relative strength is very strong. Stochastics flat at 91%. On balance volume is a little bit overbought. You can see a little bit of a pullback. At 9 is very much positive over the 14, but the price is way over the 9. But you go to the weekly chart, 9's over the 14. That's fabulous. MACD's weak. Relative strength is weak. Stochastics at 40% weak. On balance volume is the only thing that's strong. So volume's there, but you have to have follow through to the upside. And if you go to the monthly chart, these long wicks. Look, 1, 2, 3, 4 out of 5 months. 4 of the months have had long wicks and then close towards the lower end. And it almost looks like a biotech stock, right? Except the biotech stock would have plummeted after the long shadow. Now, the shadow. Anyway, what we're looking at here is this beautiful candle halfway through the month. That's a positive. So I do like it. So let me put it this way. I would rather take the risk that it could drop under 17.30 as less than the risk that it could go to a leg D in the next couple of days. Anything can happen, but it looks to me like it wants to go to 1859 or higher. And if it goes at 1 penny higher than the peak C, it starts leg D. How high it goes, now you've got all these resistances on the left side. So, sum it up, I like D-Wave, quantum computing a lot. We don't have it. It's one that was on our list. In fact, I wonder if it's even on my list now. Let me just run this through. Quantum computing, QQQQ, on the PQ. Oh, I had it, but I did take it off for some reason. Anyway, it's not there, but it's one that should be on my list. I like it. So in this particular instance, I would say that by Friday, if it's trading under the open yesterday was 17.70. It's at 18.34. If it's trading by Friday underneath, let's just go all the way. If it's trading under 17.26, the low of yesterday, that's a problem. And that would suggest, okay, think of this as maybe a head and shoulders pattern. But I don't want to go there yet because I still see so much positives in the daily chart. So if by Thursday it's suddenly trading in the 1880 to 1910 area, that's fabulous action. Now, on a more intermediate situation, if you're prepared to have a 3-4 point decline, thinking that it's still going to go to higher highs, that's my camp. I think it's going to go to higher highs, and I would just say I could do this, a rectangle formation. None of you have mentioned for a little while the Chapman methodology that uses a particular pattern called the stork leg formation. It's amazing under these conditions that we've had no stork legs that I can identify for quite a while now. But this is the cup, the double cup formation, the W, soft W formation. It looks good, should act good, and I'm just saying, looking out into this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's got 11 to go. It's got another week to go. And to test the high that was made at 20.56, the week of the 25th of July, I just like it. All right? Now, I'm just saying I like it, but you might have to put up with a little vicissitude because of the market conditions over the next week. But I'm suspecting, looking out even 2 weeks, that it holds above 17.20, 16.70. That's the area that I don't think it's going to break. Famous last words. That's just the way I'm looking at it right now. Then a quick one you snuck in there was RGTI. Another one I followed, I think, did I have this one? Oh. No, I don't. I should. Rigetti Computing. Look at this wick that is trying to fill in the monthly chart. Look at the... Look at this beautiful candle, and it's going into this big rectangle. I don't know. I actually looked at this the other day. Oh, I looked at it Friday, and today, Monday, Tuesday. Yeah, that was a big move Friday. So now I can say I'm calling this A, calling that. No, that's not an A. That's an A, and this is B. All right, for now, that's what I'm calling it. I like it very much. 19.25 up 6 cents. A day like this is moving up. I like it. I just want to look at this weekly chart because it's really important. And I don't want to run out of time. Yes. So my rule of thumb in the rectangle formation is that in the large rectangle formation, if it's a sharp move down, you can go to a peak A, B, C, D, just under, right on, or just above the previous high. And then if it takes out the halfway marker of the rectangle on the downside, be really careful. In this case, it's gone to a leg E, just under the previous high. That was the week of January the 10th at 21.42, and last week's high was 20.13. Very close. Very nice action. I'll be back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So Giraffe Cat says in the Tiger YouTube, I've been afraid of stalks since the 2007 formation led us into the 2008 financial crisis. Yeah. Okay. So what we're looking at is, you remember how many times I mentioned to Tom about the stalk leg, and it was where it was going kind of sideways and it looked like we should go down. In fact, the stalk leg suggested that we could go quite a bit higher. So yeah. All right. Let's look at this. This is Rigetti Computing. It's the same thing. Not the same thing, but it's in the same area. And this is a leg B. This is a gray B. The moment it goes above 2142, in the monthly chart, it goes to leg C. I like this very much. Look at the way it's gone stair step up, stair step up, stair step up. And that says that this could pull back to the 16 maybe 15 area. It's trading at 19.41. This is the weekly chart, the bigger picture, but it's making higher highs and higher lows. So it's looking very good. I would just say be prepared that it could pull back to the 18s very short term. But if it breaks to a new high over the next, going Thursday, Friday, that is fabulous action. Okay, let me just do this one more time. We're about to wrap up. I will be sitting in for Tommy this afternoon, 3 o'clock. Of course, I'll be interviewing Tim Ord. This should be great to hear what he says. So I'll be back at 3 o'clock, and I believe Steve's away still, so there'll be a recording. But of course, you've got Larry, and then I'll be back at 3 o'clock. Now, let's just do this. So this is it just looks like a little arching over, but it will change altogether. If all of a sudden by Wednesday evening or Thursday, we're looking at the 45,400s, that's going to be a big change because it suggests that at least sideways to down. But if we break to a new high, that's fantastic action. And the weekly says, why not? Everything here is pretty good. But the market has to tell us. I'm not telling it. I'm just preparing for both stances. I'll be back at 3 o'clock. Check out my opening call. We've had some really nice moves. One is 100% up. The other one is 60% up just in